Hi, I'm Rhonda Jones. I'm a Middle Georgia Accounting and Tax. You can reach my office at 470-507-0660, or you can visit my website at middlegatax.com for self-scheduling options. So a little bit about me. I am a federally licensed enrolled agent. That just means I specialize in income taxation. My license is good in all 50 states. I am a member of the National Association of Tax Professionals, and I am QuickBooks Pro Advisor certified in their desktop and their online versions. But more importantly, I'm a mom. I am a mom of two children, Michaela, who is going to be 25 this year, and Garrison, who is 15. I have been in public accounting since 2006. I have been licensed to practice independently since May of 2013. During the COVID closure, I was working at home, teaching fifth grade math to my son in my pajamas, working all of my client logs through remote capabilities. So when our office reopened, the schools did not. So I decided to go out on a leap of faith and open my own firm. So Middle Georgia was born, and our grand opening officially was January 2nd of 2021. So you have started a business. Now what? What's next for you? What kind of entity did you start? Have you done the compliance for startup, which includes your Secretary of State, your POI registration? Do you have a tax ID number? Did you form your business correctly? Do you have an operating agreement in place? Do you have a business bank account? What does your bookkeeping plan look like? Are you going to be in compliance? And so we can have productive tax planning purposes and then everybody's favorite tax preparation. Okay? Some of the things we're going to talk about this morning. So the type of entity that you created is important because some business owners just go on their own and they create an LLC. That's fine. You did nothing but create a business that is a limited liability company. You probably got your name. You probably have a single member LLC for this purpose. Sorry. So the first thing we talk about is how many members and what does that look like? If you have a single member, all you've done is create another schedule inside your personal tax return. If you have a multi-member LLC, then you have by default created a partnership. And do you have an operating agreement in place? Regardless of the number of members, if you are an LLC, you need to have an operating agreement in place. Did you create a corporation? Did you go through an attorney or a third-party legal provider that has created your articles of incorporation? Do you know what that means? Do you know what the requirements are ongoing for the incorporation if that's what you created? And then, of course, the tax treatment of that corporation. If you are a C corporation, which would be the default corporate structure, that entity is going to pay 21% according to this year's tax law. 21% income tax on their profit. Or we can look at we can look at making the S corporation election. So the S corporation does not pay any income tax on the entity. The profits are passed over to the owners who pay ordinary income tax on those profits. So in the beginning, when you created your company, you should have gone to the Secretary of State. You would have been required to register the name of this company. And there is also a commitment to the Secretary of State that you're going to renew this LLC or this incorporation every single year. So it's two parts. You create it and you renew it every single year, as long as you want to stay in their good graces. The second thing that you would need to do is you would need to obtain a tax ID number in the name of the company that you created as a Secretary of State. This is commonly done wrong, believe it or not. So what has happened recently is when you go to irs.gov and you fill out their free online application to apply apply for a tax ID number, the first question it says on there is name. So people put in their first and last name. Move all the way through the prompts, print out their print out their tax ID number, and it says Rhonda Jones. No, it needs to be your company name. So this is important. This is the small stuff, but it becomes really big stuff later if it's not done right in the beginning. So I always like to be a part of your new company and a part into your new business creation. I cannot do the Secretary of State LLC creation or the operating agreement for you, but I can absolutely get you to the people that can help you do that. I would just like to be involved in making sure that you're creating the entity that you think you're creating. So there's some new legislation in place, and it is ongoing. It has nothing to do with income tax, but my phone rang off the hook for about 3 months last year when all of this hit mainstream media. It is the BOI report, Beneficial Ownership Information Report. Nowhere in this does it say anything at all about income tax, nothing about accounting, nothing at all. I cannot do it for you. There are third parties out there that are offering to do it for a fee, but it is absolutely free for you to do it yourself. It takes about 5 minutes. You are going to be filling out your company's name, who owns it. If it's an LLC or an incorporation, doesn't matter. We are asking for you to voluntarily comply. You go online, make sure that you're at the federal government's website. There's an official stamp up in the corner. It's the U.S. flag. It tells you you're at the right website. We have seen tons of phishing websites that look close, but they are not the official website. The address is fincen.gov. It is a once and done. You fill out the name, address, you upload your photo ID. If you are a single member, you are also the beneficial owner of that LLC or incorporation. So you would do the exact same thing a second time. Name, address, and ID. Submit it. It takes about 5 minutes. It gives you a certificate of completion. Hang on to that with your business formation documents. And then you only have to update the BOI as needed. If your company moves, or you get new officers, or you but if you bring in a new partner, so there's multiple beneficial owners, then you update it as needed. Otherwise, it's a once and done, according to today's rules. So when you are forming your business, it's important to know what you have created. So your LLC, the limited liability company, does need an operating agreement. If you are a single member LLC, it is super simple. It says, I agree to consult with myself, and if I disagree with myself, I'm going to get a third party involved. So super simple, very generic. You can have an attorney draw this up for you. You can use some of the online websites that do this for you, but I can't do it for you. I'm not practicing law. That's one of the things you do have to do as a business owner. If you are incorporated, then I highly recommend that you get an attorney involved, because there are ongoing requirements that you have to have. If ever you're audited, if ever there's a question brought up, they are going to ask for these things. And so they're going to want to see your articles of incorporation. They are going to ask to see your most recent corporate meetings. They are going to ask to see if you have stock certificates. They're going to ask to see your minutes, your bylaws. There's all kinds of compliance that is an attorney's specialty that can help you do this and make sure you have what you need to have in place. Then as your brand new business, once you have your Secretary of State certificate, you have your tax ID number, and you have your BOI certificate, then you need to make sure you have a business checking account. Not a personal bank account in your name and your social, but a business bank account. This is the foundation of all of the business activities that you're going to have in the future. We're being told that those BOI certificates are going to start being required by the financial institutions. But again, ongoing legislation, the rules can change there. Once you have your business started in compliance and you have your new business bank account, it is critically important that you start keeping books. Bookkeeping, by definition, is just how you're going to keep track of your income and your expenses. We want this separate bank account for income tax purposes because we don't want you using this business account for personal use and vice versa. We don't want you having to use your personal funds for business use. You can use your business funds you can use your personal funds for business expenses. We just want to make sure all of that is captured in your books so that you can be reimbursed later. There are a dozen or more softwares out there: QuickBooks Online, QuickBooks Desktop, Xero. You can use an Excel spreadsheet, whatever works best for you. We just want to make sure that we have books and records. This is going to be the foundation for what is coming in your business future. These books are going to help me and help you talk about your future, your goals, and how I can advise you accordingly. So whether you're keeping your own books or whether I'm keeping your books or we have some third party doing bookkeeping, regardless of who is doing it, the burden of the proof is always on the taxpayer. So you want to make sure that your books, you have substantiation for every entry you put on that spreadsheet or that software. The auditors are not going to care that you put it on a spreadsheet. They're going to say, show me proof. So the burden of proof is always on the taxpayer. That's where it's important for you to keep records, keep receipts. I know QuickBooks Online has a feature where you can upload receipts. It's important to keep, if you're reimbursing yourself for expenses, keep those receipts so that you can match up how much you're repaying yourself, even if it's years down the road. You may not have the money in your business the very first few months or few years of operation, but you're going to be entitled to be reimbursed. So it is significantly important that you keep those books and that those books are accurate. Our preference would be that you keep your books monthly. Some clients, they only want to do their books once or twice a year, and that's great. When we're right now in February trying to get books done for last year, do you remember, Mark, do you remember what this check was for? It was January of 2024. So 13 months ago. You might not remember. So it's significantly important that you keep it current and that you and I have conversations throughout the year so we can talk about proactive approach to getting you to your business goals. So when we talk about your income and your expenses for your business, income is income. Pretty straightforward there. Income is what money you have received for the services you're doing. Regardless of your industry, income is income. Expenses is where it gets a little tricky. So the IRS says that deductible expenses are, quote, ordinary and necessary expenses incurred to perform your business operations. Okay, so you are going to have expenses that are ordinary, necessary in your line of work that would never apply mine. So this is where it gets a little generic. So some of the most common things that I think we all have are going to be things like advertising, office supplies, insurance, utilities, rent, legal and professional fees, auto, cost of goods, and of course there's dozens and dozens more. This is just kind of a short list of things I think we all have. So a little bit about compliance for single member LLCs. We are again going to rely on those books to tell us if you are making significant profits, significant losses. What does that look like? Where can we help you budget your money and tell you where you're spending too much? What can we tell you that's a better return on investment to put more money into? If you are putting I don't know, 100,000 miles on your car, but you haven't paid a dime in advertising. What are you really doing? Do you need to spend that money instead of in gas on your website, your business cards, your business professional network? There are things that we can help you see, and we can help you make those adjustments accordingly. There are many times where we advise that you take your single member LLC and you make the tax election to be treated as an S corporation. The S corp election has, of course, pros and cons for every business owner, every business decision. High level, there is no self-employment tax if you are an S corporation. Self-employment tax for an individual is your ordinary rate plus 15.3%. It is a double taxation. As an S corp, you do have to pay yourself a W-2 officer salary. The definition by the IRS is that that salary must be reasonable. Reasonable. Bridget, what's reasonable to you? Going to be different than what's reasonable to you, Mark, right? So again, very subject to interpretation. There are softwares out there that help us determine what's reasonable for your industry, for what you are doing. And it's really centered around if you were doing this exact same job for a company owner that was not yourself, how much would you get paid? Cynthia, would you work for $7 an hour if you didn't own your own company? Exactly. So lots of conversations that we have if we determine you need to S corp and if you need to start paying yourself an officer salary. It also has to make financial sense to S corp. To make the S corp election is costly. You have ongoing costs. It's going to require money. It's going to require time and compliance. So it has to make sense financially. As much as I would love to take your money, you could pay me every single month to handle all of your compliance. It's going to cost you on average $6,000 to $8,000 a year. But if I'm only saving you $2,000 in tax, have I done you any favors? No. It has to make sense to do this S corp election. The most common question that I get is when do I need to S corp? How do I know? That answer is going to be very different for you, Naima. It's going to be very different for you, Mark. It's going to be different for everybody. So on a case-by-case basis, there are so many factors to look at. The nutshell answer is when the amount of income tax you are paying is greater than your cost of complying as an S corp. Again, my cost annually is about $6,000 to $8,000 a year. So if your tax is greater than that, we're going to have conversations surrounding getting you out of self-employment tax legally. If you are a multi-member LLC, you have defaulted yourself as a partnership. Partnerships also do not pay income tax. They pass their profits on to their owners, and their owners pay ordinary tax plus 15.3%. So if you're in a partnership and your partner is in a significantly higher tax bracket than you, your income tax is going to be very different on a case-by-case basis. You do not have to have payroll in a partnership. This is also the most restrictive tax structure to use as business operating, and it is generally in my office not advised. It is not advised. So my mentor, Chris Bird, says the only ship certain to sink is a partnership. So our very first question, when you tell me that you have a partner, I'm going to say, do you like them? Because here's what's going to happen. The restrictive requirements surrounding a partnership will always create a disagreement. Somebody is going to get not their fair percentage, not their percentage of ownership, not something is always going to come up. And because the requirements are so strict surrounding partnerships, you have just undone the entire operating agreement. Just like that. which is why I do not always recommend partnerships. But we do, from your books, we typically meet twice a year. We talk about your goals in real time. What do you want this business to look like in 6 months? June 30th, we're going to be talking again. What do you want this to look like before the end of the year? Do you expect this big contract to come through? Do you expect that you're going to be buying assets? We have to have these conversations proactively so that we can best advise you. I am a firm believer that you opened this business to do what is best for you, your family, your future, your feelings, and we'll pay tax on the rest. So the way that we do that is we sit down and we look at your numbers. What is best for you? Do you need to take more payroll, less payroll? Do you need a bonus? Do you need a shareholder distribution? Do you want to purchase assets? And depending on your structure, that answer is going to be different for every case by case. What is best for your family? Do you have young adult children in college that are less deductible now than they were when they were 13? Can we put them on payroll? Are they eligible employees? For your future, what is best for your future? Is it time to put a retirement plan in place? Because I know a gal. Is it time for you to buy life insurance, health insurance? I know a guy. Is it time for you to bring on more employees? I know somebody else. They're all things that we're doing in real time to help you. And then, of course, your feelings. Are you a charitable giver? There are state-sponsored programs out there right now, at least in the state of Georgia, that as a pass-through entity have significantly higher deductible amounts that you can donate than as an individual. And once we've done that, once we have told you what is best for you, your family, your future, your feelings, then we're going to pay tax on the rest. We can tell you in real time if you don't do these things, what that tax bill look like. But if you do A, B, C, and D, or maybe you just do A and C, what is that going to look like? We can get you a pretty close number just by knowing what your books show in real time. Regardless of your structure, you have to file a tax return. I know that's shocking. Shocking news. If you are a single member LLC, created that Schedule C on your individual tax return, well, it's due April 15th every year. Every year. It's not optional. You can extend it and get some more time. That'll take you out to October 15th. If for some reason you didn't listen to anything I said and you created a partnership, it's due on March 15th and it's extendable out to September 15th. And if you are a calendar year, meaning your year ends on December 31st, like everybody else's, C Corp or S Corp, you're going to be filing an 1120 or an 1120S, also on March 15th, and it is extendable to September 15th. So at our office, we are a full service accounting firm. What that means is we can help you through every step of your business needs. We can help you with your bookkeeping, your payroll. If you have sales tax, we can help you with that. We can always help you with income tax, but I think where you find the most value with us is in tax advisory. And then if you get on the naughty list through no fault of mine, we can also help you in taxpayer representation. We are a proactive firm. That is my foundation in starting this. My industry is almost always reactive. We are looking now at what happened last year. My firm likes to take the proactive approach. Yeah, we're going to do tax returns for last year, absolutely, because it's required, and we've done the books, and we've told you what to do, and you've done all those things, and tax returns come out super simple. But what we're also looking at is how is your current year? How is your first quarter going to look? Because in May, we're talking about it. And July, we're looking at the first 6 months of your world, and we're telling you, hey, based on where you're at right now, this is where you're going to end up if you don't change this or that. So we are proactive, and we want the best clients. we only have the best clients, as a matter of fact. They are participatory. They are absolutely participating in their own future. They are also proactive in this working relationship. If I send you 4 emails and I'm like, let's look at doing A, B, C, and D, and I haven't heard back from you, this is probably not going to be a good fit for us because we want you to be involved. I can lead you to that water, but I cannot make you drink. So we want clients that are going to be involved and proactive. And then, of course, on a case-by-case basis, we are taking new clients, so feel free to reach out to my office if you need any assistance. And then I think we have time for questions, even if it's a generic answer. Feel free to ask.
What would you say to the people that are just starting a business? And we all know there's a cost of doing business.
Yes.
And you've got someone that's been around the block numerous times where you've had great successes, you've had life happen, and then you're actually going back, you're starting a new company, you're going through your savings to build the company, and we've got this requirement. So when people are starting a business and they're going, wow, you're saying it's, how much a year for accounting? And if you're not making any money, is there a way to be in business, have the write-off of what's required to be starting a business, but you still have to file? But why should I pay
Absolutely.
$5,000 when I'm not making money?
Absolutely. So when I said it has to make financial sense to do so, if your business is running at a loss, I am not going to tell you to spend your money on, S corporation or C corporation, or whatever your goals are.
About someone that already has it.
You already have them.
Or maybe, you go through a setback or something happens, and you went from having an extremely successful company,
Right.
and now you're regrouping and restructuring, and you're using your own money to rebuild that company, and you've been in business for years.
Right.
And so you were required to file,
Yeah.
but you're going, wow, I need that money to grow my business, not to spend $5,000 just to prepare taxes, and I'm a ruffle some feathers, to send to the government to waste it on crap I have no control over, right? So,
yes. So the 6,000 to 8,000 that I mentioned, those are the average annual costs of full service bookkeeping, income tax preparation, and 2 advisory meetings a year. So again, it's very client specific. If you didn't need all of that and just needed a tax return and you were bringing me your books and you have substantiated proof, I'm doing a tax return once a year for you, it's not going to be $6,000 to $8,000 a year. Depending on what structure you have determines what form you have to file, which the complexities of it is how we get to our pricing for tax returns. That was more of a generic, once you start your business and it's highly profitable, what's the cost of compliance to convert from single member or multi-member to an S corp? Yes, ma'am.
Kind of to Mark's question, can you go from an S corp back to a Schedule C?
You cannot go from an S corp back to a Schedule C with the same entity. So once you were in your S corp, then you would have to do a final S corporation and then subsequently start over. All right. Thank you, guys.
Rhonda?
Having an accountant in your business is very important.